Welcome to our team's presentation. I'm Wei Lingxin. Our team is Financial Mavericks. The COVID-19 pandemic had hit majority of the Malaysian business community in terms of economy and financial health. We will conduct analysis using financial research for DELEUM, Berhad, and UZMA Berhad from the year 2020 to 2024. Today, we are diving deep into the financial stories of two Malaysian energy players. To answer a critical question, which company holds stronger financial potential? Let's start my teammates. Ingeborg, who are DELEUM and UZMA, and what do they do?
Hello everybody, my name is Ingo and I'll be going over these two companies, DELEUM Berhad and UZMA Berhad. DELEUM Berhad is a Malaysian-based energy provider established in 2004 with its headquarters in Kuala Lumpur. It is listed on the main board Bursa Malaysia as core businesses in providing all field services. Its major customers are Petronas and its subsidiaries. Its position in the market is relatively conservative, focusing on long-term services with an approximate revenue of 907 million Malaysian ringgit at the end of 2024. Now going to UZMA. UZMA is a major industry in the energy technology and was established in the year 2000 with its headquarters in Petaling Jaya. It is listed on the ACE market. UZMA focuses on oil field enhancement recovery, renewable energy projects, and their main customer are Petronas and international energy companies like in Philippines. UZMA market position is technologically oriented, focusing on innovation and sustainability. At the end of 2024, they generated a revenue of over 600 million Malaysian ringgit. Now I'll be passing to my teammate Zitong to introduce the key financial ratios.
From the chart, DELEUM's ROE is dropped and rebounded, while UZMA credit ratio stays stable as the deeper. This slide shows 5 key financial ratios from 2020 to 2024: net profit margin, debt ratio, ROE, credit ratio, and assets turnover. We picked this ratio because they show how well each company is doing in terms of the profit, risk, and efficiency. DELEUM's ratio are more stable and improving, especially current ratio and ROE. UZMA performance changed more with good results in 2023, but a drop in 2024. Its debt ratio is also high throughout. Overall, DELEUM seems to manage its finance more steadily. Next, we will break down trade in 3 pillars: profitability, solvency, and efficiency.
Let's look at profitable performance over the past 5 years. UZMA had an impressive net profit margin spike in 2023, 35.85%, so far above DELEUM. However, this may be temporary. When we shift focus on return on asset, DELEUM shows more stable and sustainable performance, reaching 11% in 2024. So while UZMA appears more aggressive and high growth, DELEUM offers steady returns, but profitability alone doesn't tell the full story. Next, let's check their solvency to see how well they manage financial risk.
Hi, I'm Shamila, daughter of Goindanaju. I will be presenting the slide about solvency and data analysis for UZMA Berhad and DELEUM Berhad over the period from 2020 to 2024 based on 2 key financial ratios, which are the debt ratio and the times interest earned, or known as TIE. Let's start with the debt ratio chart and the comparison table. UZMA ratio stays relatively consistent, averaging around 0.59, which indicates that it relies quite a bit on the debt. However, DELEUM shows more fluctuation because even it had high debt ratios in 2020 and 2024, it experienced a significant improvement in the years 2020 and 2023, which both dropped below 0.4 ratio. By seeing the comparison table, we can clearly see that UZMA remains steadily leveraged, while DELEUM shows a better deleveraging ability during the mid-years. Next, we are going to talk about the time interest earned ratio comparison between UZMA Berhad and DELEUM Berhad. This ratio clearly shows or reflects the interest payment ability of a company. As you guys can see on the comparison table, UZMA faced difficulty in 2021 with a TIE below 1, which implies that it couldn't fully cover its interest expenses. However, it shows a gradual improvement after that. In contrast, DELEUM Berhad maintained a very strong coverage, especially in 2023, where the TIE surged past 400 times. This is an indicator of excellent earnings relative to the interactive cost. In a nutshell, UZMA is steadily improving but still under high financial pressure due to its high debt and relatively lower interest coverage. DELEUM, while it started and ended with a period with high leverage, it demonstrated better financial flexibility during the mid-years with stronger solvency and ability to manage its interest obligations effectively. Thank you.
Hello everyone. Now I will walk you through this slide comparing the operating efficiency of DELEUM and UZMA from 2020 to 2024 based on three key metrics: inventory turnover, accounts receivable turnover, and assets turnover. Starting with inventory turnover on the left, we can see the DELEUM consistently outperformed UZMA. In 2023, there were a significant spike, which indicates faster inventory movements and possibly better supply chain efficiency. DELEUM inventory turnover improved by 20% post-COVID, reflecting stronger demand recovery or improved stock management. On the other hand, UZMA remained relatively flat over the year. Moving to the middle chart, accounts receivable turnover, DELEUM show a sharp increase starting in 2023, suggesting better credit control and faster collection. In contrast, UZMA receivable turnover lagged, maybe due to new market expansion, which could have led to a longer customer payment cycle. So finally, on the right, we have assets turnover. DELEUM show a steady growth year over year. Main is generating more revenue from its assets. UZMA, however, stay at a much lower and stagnant level, suggesting this effect assets. Overall, DELEUM demonstrates stronger performance across all three efficiency metrics.
Today we compare UZMA.
Next, I'll talk about liquidity analysis. There's two graphs that I was presented to you today. So the first graph is current ratio graph of two companies, which is DELEUM Berhad and UZMA Berhad. So from the graph, DELEUM Berhad shows a strong and improving liquidity position, reaching a peak in 2023 before slightly declining in 2024. In contrast, UZMA Berhad's liquidity steadily declines over the years, indicating a weakening ability to cover short-term liabilities. And the second graph is quick ratio of two companies. So from the graph, DELEUM Berhad demonstrates improved liquidity, maintaining a solid quick ratio, while UZMA Berhad's quick ratio declines consistently. highlighting potential challenge in meeting short-term obligations without relying on inventory. So from the graph, we can say that DELEUM Berhad appears to have a strong short-term debt repayment capacity with both its current and quick ratios indicating sufficient liquidity to cover its short-term liabilities. Even with a slight decline in 2024, the company remains in a favorable position, while UZMA Berhad, on the other hand, faces challenge in managing its short-term liabilities effectively, with both the current and quick ratio showing a declining trend. The company may struggle to meet its obligation without relying on the inventory, which could be a risk in a situation where inventory cannot be quickly liquidated.
Today we compare UZMA and DELEUM using 3K investor reviews, EPS, P review, and capital sales. The first, DELEUM has a higher EPS, 0.251 compared to UZMA's 0.1294, suggesting stronger short-term probabilities. However, UZMA's P review is much lower at 5.77 versus 8.16, which may indicate it's undervalued in the market. Most notable, UZMA reinvites over 51% of the revenue compared to DELEUM as 29%, showing a stronger focus on long-term growth. So where DELEUM looks stronger in terms of immediate earnings, UZMA's valuation and reinvestment strategies suggest great future potential. But beyond reviews, we also consider strategy directions. UZMA is actively transforming into green energy in line with Malaysia 2030 renewable goals, and this makes it a better position in a shifting energy landscape. And meanwhile, DELEUM remains more traditional and therefore more exposed to oil price change. And based on these factors, our group recommends UZMA as a better long-term investment. It may not lead in the currently profitability, but its growth-oriented strategy and the sustainability focus make it a smarter choice for future-focused investors.
Moving on to beyond financial ratio best analysis, DELEUM benefit from stable contracts with government-linked companies and more dependent on traditional oil and gas policies. Meanwhile, UZMA company actively adapting to government initiative for renewable energy and also positioned to benefit from Malaysia's energy transition roadmap. And the next in past analysis is economy. In DELEUM company more stable during oil price fluctuation due to conservative operation and also may face slow growth in a low oil price environment. Meanwhile, for UZMA company, it is more aggressive expansion strategy may be riskier during economic downturns, and also high capital investment can be sensitive to interest rate changes. And the third is social. For DELEUM company, lower public visibility and engagement in ESG, which is environmental, social, governance issue. And also, traditional oil and gas focuses may not align with changing public sentiment. Meanwhile, for UZMA company, stronger branding in energy transition and sustainability. It also appeals to socially conscious investors and partners. And lastly, for technology, DELEUM company, lower public visibility and engagement in ESG, which is environment, social, governance issue. And also, traditional oil and gas focuses may not align with changing public sentiments. Meanwhile, for UZMA, it is stronger branding in energy transition and sustainability, which appeals to socially conscious investors and partners.
Good day, Doctor. Today I'll be presenting on the conclusion and recommendation of the financial ratio analysis. After comparing both companies from 2020 to 2024, it's clear that DELEUM Berhad performed better than UZMA Berhad in most key financial areas. To begin with, DELEUM had stronger liquidity, meaning it was better at covering its short-term debts. In 2024, its current ratio was 2.55, while UZMA's was only 1.03. DELEUM also showed greater efficiency, managing its inventory and receivables more effectively. Its receivable turnover in 2024 was 7.22 compared to just 3.17 for UZMA. In terms of profitability, DELEUM delivered higher earnings per share at RM 0.251, a 14% return on equity, and more stable profit margins over the 5 years. Lastly, DELEUM gained more investor confidence as shown by its higher price to earning ratio of 8.16 compared to UZMA's 5.77. This indicates that investors trust DELEUM's performance and future growth. To make the comparison more visual, we created a pros and cons matrix summarizing the strengths and weaknesses of both companies across key financial areas. DELEUM shows clear advantage in liquidity, efficiency, leverage, and profitability. It has lower debt, better asset management, and stronger earnings. UZMA, on the other hand, struggles with higher debt level, weaker profit margin, and slower operational turnover, making its financial position more vulnerable, especially during economic uncertainty. Based on our analysis, we recommend DELEUM Berhad as the stronger investment option. Its consistent performance over 5 years, combined with low financial risk, stronger returns, and positive investor sentiment, make it a more stable and attractive choice for long-term investors. Looking ahead, DELEUM's outlook is positive. As Malaysia's oil and gas industry continues to recover after the pandemic, DELEUM's strong financial position gives it an advantage to win new contracts, grow its business, and explore new opportunity. With ongoing government support for local energy companies, DELEUM is in a good position to benefit from the future industry growth. Overall, we believe DELEUM Berhad is ready for long-term success and steady profits. That's all from us. Thank you.
Since we have chosen the Berhad, we have compiled key financial data for investors to view. Any question? We can discuss later. Goodbye, everyone.